If you're day trading with TradingView indicators and still getting stopped out, you're going to want to see this. You're missing one of the easiest concepts in trading is guess what? Liquidity sweeps. And a lot of people fail to understand this in the beginning. This works on Bitcoin, crypto, Forex, futures, stocks, you name it, any market, it's there. Today, I'm going to show you the exact entry model I look for when I am looking at these liquidity sweeps and what you can spot instantly so you don't get stopped out of your trades and think something is going up when really they're just trapping you and trying to stop you out. Let's get into it. Let's get into one of the most important concepts as a day trader here. And this does not have to do with TradingView indicators or anything like that. This happens in every market, Forex, futures, crypto, right? Trading Bitcoin, Solana, Ethereum. You need to look for this at market opens, right? New York, London, Asia, whatever it may be, because it happens every day, all right? And this is exactly what you're looking for to find possibly the best entry prices and the best take profit levels. So a lot of times, and I'm just going to rewind back to, we saw this exactly on Wednesday this week, and I told my live trading group this, we see this time and time again. I'm going to show you exactly what to look for so you guys don't fall for basically market open trickery. A lot of retail traders fall for this and they get stopped out time and time again. So pay attention here. And we are actually covering liquidity here. Very important about liquidity. You want to move to higher time frames. This could be the 1 hour chart, the 4 hour chart, whatever it may be. And what you're looking for are high areas and low areas you can mark out on your chart. So for instance here, right, nice clean chart just so you can see it. But we have some high areas up here. We'll see like price almost came here, right? Low areas, you'll see price came all the way down, swept this area, came back up. And I am a scalper, so I am looking at these areas to take potential scalps off of. We can mark out some other areas. We're just on the hourly time frame here. I will actually, I said no trading view indicators. I'm going to show you a really cool indicator I use so you don't have to mark these out continuously in case you don't want to mark them or in case you don't want to do this day in, day out. But a lot of times people are looking at the hourly, the 4 hour higher time frames to see where we could possibly sweep liquidity or not get stopped out at. We have a high here, we came up, and a lot of times, okay, these institutions, they're going to have such big buy orders that they're trying to get in at the best price, and then they're going to tank it on you, right? Retail traders, a lot of them, I'm going to tell you exactly what not to do here, so pay attention. So retail traders, right? They're going to be like, oh, I'm going to buy here. We're going up. We have higher lows going on, higher highs, higher lows, higher highs, all right? You want to be getting in down here. We don't want to be getting in up here for a little pipsqueak of a move. Yes, can you make money on that? Could you put a whole lot in there? Yeah, but you're going to be freaking out during this trade thinking, how high is it going to go? It only went this high this time? Damn it. And then it's going to flip on you and you're already back at break even. So what you're looking for here, and when was this? This was actually probably New York's flip. So New York usually have, right, the market open around 9:30 a.m. Eastern. And then a lot of times they'll flip in the afternoon the opposite way. A lot of times. If they're not flipping, usually they're consolidating after that morning run, is what I like to call it. So what we're really looking for here are strong moves up and strong moves down. For instance, Wednesday here, I pointed this out in my live trading group. All right. Like I said, these big institutions are looking to get in at the best possible price, meaning the top. Okay. So if we draw some highs here, right, on the 15-minute time frame, here's a high. Okay. Funny enough, it tapped it perfectly up here. Here's another high area, right? This was around 2 a.m. So London's open, right? London's open up here. This is right at market open here, okay? So this is really great here. I'm going to tell you exactly what to look for on these liquidity sweeps on the higher time frames. And then when you're trading on the 1 minute, 2 minute, 5 minute time frame, whatever it may be, so you're scalping, you can wait for these to play out and see what happens. All right? So we can also mark out our low areas, right? We do have low areas here. So low areas, here's a low. Okay, we came down, wicked through. wicked right back up. This would probably buy side and sell side liquidity happening right at 8:30 a.m. Central Time. Here's another low kind of area. You'll see perfectly here. Look, double bottom, we tapped liquidity, came right back up. And so you're basically hopping to higher time frames and marking out these high and low areas to see on market opens where we could possibly sleep. And yes, it does happen throughout the day too. But market opens are going to be really key because we want to determine the trend direction. I would say probably anywhere from the first 15 minutes to an hour open. That way we're able to take hopefully good trendy trades. We have been more in consolidation lately on crypto, right? We had our huge, right, crypto crash or whatever you want to call it, but we are current kind of consolidating on the daily time frame, which is fine. So if you see here, and I'm going to point this out, we marked this area. So right, if we move to the 5-minute time frame here, now we can mark some other, right, high areas off to the left-hand side. We have a high area here, okay? Could draw a box as a zone, kind of around the wick areas. We have another high area right here, all the way across, okay? Have a few highs over here, and then draw a box around it. I'll just do lines to make it easy today, but you can simply draw a box or line and look at these zones and see where we're tapping into for the day. So basically, right, market opens are pretty key, especially New York, but they're trying to fake you out. So after you draw your lines, and this could be, like I said, any time of day, but you're going to have high and low areas. Like I said, they're looking to get in at the best possible price. I'm just trying to so we have some high areas here, right? All the way across the board. Backtrack, I'm just showing you how to draw high and low areas where we could possibly reach into. So you'll see here right at 8:15 a.m. This can sometimes happen a little before New York open, a little bit after, but they're trying to set their moves and their orders so they're able to get in at the best possible price, like I said. So right at 8:30, we get a huge candlestick to the downside. Now this is New York's trickery trying to trick you out. Because what are a lot of retail traders then thinking here? Especially after this huge downtrend. They're thinking, oh, hell, we're going to go short some more, right? We're going to go short. We have some lower lows, lower highs going on all the way across the board. But this is simply a liquidity sweep, right? We have this low here. It's taking out this low. And how you can tell this on the higher time frames, look for wicks. Look for wicks. Could be 5-minute, could be 15-minute. Depends what you're playing, right? Are you playing 1 minute, 2 minute? I'm usually on the 5-minute time frame, but drawing my Fibonacci on the 1 minute so I can get more precise entries basically with the price. But you'll see here, we got some massive wicks through this low area, okay? So this is New York's trickery trying to trick you out. Same back here, right at 8:15 Central AM. We got a big wick up here, right? Taking out this high here, taking it out, okay? This is your sign for a pull downward. So you want to be selling here, okay? Opposite of the kind of trend, especially on lower time frames. A lot of retail traders, especially during market opens, are going to think up, we're going up, we're going up, okay? New York's going to fake you out. You're going to see a big old wick on higher time frames, maybe the 15-minute, maybe the hourly. Look for these wicks because these are the liquidity sweeps. So liquidity sweep, what do we get? Huge downfall to the downside. And I'll move to the 5-minute, see if we had some 5-minute bearish fair value gaps there. But huge downfall to the downside. This would probably, if you saw a 5-minute bearish fair value gap here, what I talked about on my channel, probably a market in order. A lot of times that'll happen during New York. And if you wanted to write it to the slow, right, take profit, call it a day. However, let's say you missed it. It fell down super quick. That's fine. Look what we have. Right with this low, sweeping another low, and you'll see this throughout the day. We just swept another low. So what's New York going to do? What are the big guys going to do? They're going to be like, all right, so we were in a downtrend. We even broke a trend. People were thinking up. Okay, we're going to go up. We're going to go up. We took out all the buyers' stop losses, right, with this big old candlestick. We even probably had people thinking here, right? Oh, I'm going to go short some more. When was this? 6 a.m.? Maybe I'm going to go short some more here. I definitely wouldn't go short more here with the low being here and the wicks being here. That's just a sign of a bottom for me. But a lot of retailer traders don't draw their highs and lows and they can't see this clearly. So they could be thinking, hey, we could go lower. They're going to draw their fib, look for entry, and they're stopped out. Boom. So now New York has taken out short traders. They've taken out long traders. And then guess what? They'll make their final move. So we had some wicks, sell side liquidity sweep right down here. Wicks are your big indication of liquidity being swept. So look for these wicks on the higher time frames. I prefer like the 5-minute, 15-minute. Hourly is always good, right? Hour's going to take a little bit longer. So that's why I'm usually looking at 5 or 15. But look for these wicks. Check out this wick. And this was a pretty strong move down. And I told my live trading group this. When you see these strong move down, a lot of times we're going to shoot right back through it, okay? Don't be thinking short here. Instead, think the opposite way, because this is the mind trick, right? An overall mind trick on you. You're seeing this big old red candle. You're like, I am going to short. We have a nice big old red candle. We're going to go down even more. That's what a lot of retail traders are thinking. No, guess what? It's going to flip on you, come right back through, because that's what the big guys want to do. Now you're stopped out of your short again, right? So now it's going long. So how you want to be thinking instead is when you see these big pull downwards in the morning at that New York market open time, think the other way, because it's going to come right back through it. I see it time and time again, especially as another additional confluence, right? If you're getting wicks, 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 wicks. All right. So this was what? Tuesday this week. So if we move to the 5-minute time frame really quick. So this was Tuesday, right at market open, down pull. I tell my live trading group this. After we see this initial down pull, we're going to come right back through it. And look what we did. We came up right back to this high. We even swept this high. Look, more wicks, even on the 5-minute time frame. That's another sweep and right back down. Okay. So they did a couple of tricks on us. Oh yeah. This was New York's actually afternoon flip. A lot of times with New York, you'll get like an afternoon flip. When does it happen? Pay attention, kind of look at trading view indicators, see if you're hitting key levels, look at divergences, things like that, right? We hit pretty key level. Look and see if you're getting wicks, right? On the 15-minute, I'm sure we got a pretty strong wick there. So if we're moving to the hourly on the same day, look, this candlestick. Huge buy side liquidity sweep. Huge sell side liquidity sweep. These are the wicks I'm talking about. So you want to be aware of these. If you're getting a strong wick like this through your low, especially on higher time frames, get ready because it's about to push up. Okay. This is where you want to be marketing in. You may not have time during New York to wait for a pullback or something like that. But these are when you want to be marketing in for a buy order. While a lot of people are thinking sell here with this big bearish candle, you're going to be thinking buy instead because you saw the wick here. All right. So this is very key. Now let's take a look at Wednesday real quick because Wednesday, well, 2 days in a row happens all the time. Like I said, 2 days in a row this week. Okay. So Wednesday, 8 a.m. Central. So 9 a.m. Eastern. What do we see? 15-minute time frame, buy side liquidity, sweep. We're sweeping this kind of low area. This is great. We're sweeping this low area. I'll just even move this line down a little bit. We didn't quite come there, right? Let's see if we have any other highs. Don't think we do. But we did come down, or we did come back up to this resistance area. And on higher time frames, this is a wick. You want to wait for these wicks to play out, see what happens before making a decision. So New York, hey, all the big institutions and everyone else are getting in a great sell price right here. We had a downtrend going, right? We had a great downtrend going. They want to get in a better sell price. They're going to sweep liquidity in the beginning, get a nice sell price here, and then they're going to head back down. All right. We took out how many retail traders probably thought, oh, I'm going to buy here. We got a nice, or I'm going to buy here. We have a nice big bullish candlestick. We have higher lows, higher highs going on, right? I'm going to press buy right here because you didn't wait for the candlestick close. And guess what? You're stopped out. So New York stops everyone out. They have great short positions now, right? They take a short down. Where's our low? Where's our low? Draw a line. Here's our next low area. Look, sweeping out this area now. Even if we draw it across, I bet we're hitting some sort of support resistance area here. Yep. So we're hitting that area. Sweeping it out. We didn't really get good wicks, I would say here. What, 99.15? This is more a oh yeah, it was a consolidation day. Was crappy. So we are in a consolidation mess right now. So it's in back and forth. But New York, right? Possible. And a lot of times you'll see this too. You're going to be thinking, okay, ignore this part of the chart. You're going to be thinking buy right here. But a lot of times, guess what's going to happen? It's going to have this initial move upward, right? We swept this low. It's going to have this initial move upward, and then it's going to come down one more time, all right? And as a scalper, this could potentially stop you out if it's coming down this low, okay? So this is your double bottom. Wow, double bottom. Sometimes it'll make a perfect double bottom. Sometimes it'll only come to this kind of area, like 0.17, if I draw my fib real quick. A lot of times, oh, it did pretty much. A lot of times it'll come to that 0.17 level. So you'll be thinking buy here on a 5-minute time frame. So on the lower time frames, this is very dangerous scalping, right? We have this big move downward. And what do I say after a big move downward? We're going to come right back through that, back up. They want to trick you. They want to make you think we're going short when really they're going to pick their buy positions. They're getting in at a super low price down here, and it's going to come back up. Now, there can be, like I said, it may have this first initial move up. Then a lot of times I'll see it fall right back down, usually around the 0.17 level. Sometimes even it'll make a perfect double bottom, but a lot of times it's a 0.17 level. Grab some more buy orders, right? Like they do. And then there's their push up to 1.272. Okay. So you want to wait for these liquidity areas to actually play out for New York. Okay. Because they're going to trick you every which way. And if you're not looking, right, to draw all these lines or zones, which is helpful and great for practice, but there is a trading view indicator. As I said, no trading view indicators. There is a trading view indicator called Spaceman, BTC, key levels right here. All right. If you just pull this up here, okay, look, here's all your lines. Isn't that great? I'll just show you how it appears, right? Here's all your lines that we were drawing. Look, it signaled this high. I'm guessing this was probably previous day mid or Asian Open or something. I guess we can scroll over and see. But you'll see here, yeah, this was Asia Open it was sweeping. A lot of times we'll sweep the previous session. So New York will sweep London, usually. Asia will sweep New York. London will sweep Asia. These are kill zones. So you'll see here, imagine placing a sell order right at Asia Open and London's high. I guess London would still be playing out at this time, but imagine placing a sell order at Asia high and you get the sweet drop down. You take profit at the next low here, you're golden, okay? So that is what we're looking for, these sweep levels. And you're looking to enter at these key levels as close as you can get to the top. Now, what's the top, right? Wait for the wicks. You can wait for additional confirmation. This could be a bearish divergence. It could be a bearish fair value gap. So let's say you get your wick, you get your liquidity sweep right at a key level, which is Asia's high here. And what's next? You have your fair value gaps. All right. So if you're waiting for confirmation, look, you have your 5-minute bearish fair value gap. Certainly take an order there. A lot of times with New York, you'll have to just mark it in because it drops or moves up so quickly. But even if we draw our fib, a lot of what I teach, the Fibonacci retracement, we did come up to that 0.786 area, all the way down, almost to 3.618, but all the way down to this kind of low area before reversing. And if you see these huge drops, get ready for another push upward. So are we getting a bullish fair value gap through here? Let's see. Let's see what happens. Oh, there's a bullish. Oh, now we got a bearish fair value gap, right? You'll have to wait for the 5-minute candle to form. But if our 5-minute bullish fair value gap does not work out and we form a 5-minute bearish fair value gap, I'm immediately getting out of that on, saying, screw it, not worth it. I don't know how far we could go down, right? In this particular instance, we made a double bottom, hit that 0.17 level, then came back up there, right? The institutions were probably just collecting more buy orders here. They want to make as much money as possible. So watch out for these key levels. Spaceman BTC key level will help you draw those high and low areas pretty instantly for you. So you can see where potential sweeps could possibly happen. Now, how do I know it's not going to hit here or here or here? Wait for the wick. Wait for the wick. Wait for the 5-minute, 15-minute hourly wick to play out and see where that wick happens. These wicks are going to be key for your liquidity sweeps. Same with the bottom zone, right? We hit a key level down there, a 4-hour mark, probably the bottom. What? We hit a key level down here, and then we got a strong move upward. Now you could wait for these 5-minute bullish fair value gaps again and take a move upward. These are all things to play with and look at when you are trading, because these liquidity sweeps are going to happen all the time. So the key things you need to look for liquidity sweeps, so you're not getting stopped out of trades, right? Like I said, a lot of retail traders, they'll be thinking, oh shit, I'm missing this great uptrend, right? We're going to buy here, have the tiniest little move. It's going to completely flip on them. Then they're done, stopped out. Or if they didn't set a stop loss, they're really done. So they're really done and down there. Now, if you're seeing these moves to the downside, get ready for a pull to the upside. Watch for wicks at the bottom. Watch for the lows. See what lows are being hit with those key levels. As you can see here, we're hitting a key level. How do we know? How do we know it's not this key level? We did get even a wick through there. We got to wait and see. Another, right? Confirmation trades. On the 5-minute, I'm always looking for a 5-minute bullish fair value gap. So let's say we saw this candle wicking through our low kind of area here at a key level. We never got a 5-minute bullish fair value gap though. So that means it could still go down further. Then we get our 5-minute bullish fair value gap right there. Oh, nope, haven't gotten it yet. No bullish fair value gap yet. So we're still moving. There's a bullish fair value gap. There's a couple of them. However, then we form a 5-minute bearish fair value gap. So long is invalidated. Get the hell out of that trade, right? Nothing is going to be 100% in trading. If you were thinking long here and you took it, that's fine. You took the risk. If you see a bearish fair value gap form, just get out, call it a done deal. Wait for it to come down again, right? See if you get another bullish fair value gap, then you can take a long again, all right? So this is what to look out for liquidity sweeps, and you'll see how wicked awesome this looks on the hourly. Look at this wick on the hourly. So this is why you move to higher time frames when you're trading to see what happens. Hourly. Ooh, is that a wick or what? Through all these hourly bearish fair value gaps. I said we could possibly move into these, right? And come right back down to this bullish hourly fair value gap. Let's see if we actually did. Not quite, not quite. We were like right there, so close to the top of it. But you get the picture. These are what we are looking for. The main indication of a liquidity sweep are those wicks on the higher time frame. Also look at trading sessions indicator. This is a good indication of where we could possibly hit. Like I said, a lot of times New York will try to sweep London. London will try to sweep Asia, so on and so forth. So depending on what area we're closest to, if we're really far from Asia's high during a London session, probably go with Asia's low. Are we going to have a big chance to move up there? But you'll see, where'd that one statement? You'll see New York. So this orange box is London session here, right? So here's London's kind of low area. And that's exactly what New York aimed for, okay? Now, it was still forming London's high up here, came back all the way up pretty close to London's high before flipping again, probably for market close here. Asia, let's go back to trading sessions here. Look at a couple more. But you'll see, right, London's high here. We had a couple legs up more before completely flipping back down. Same with the kind of beginning of the morning for New York. Here's London's low area. What do? Sweep it. What do I say? Strong move down means strong move back up. Okay? Unless we're doing some crazy consolidation, then we may move down further, but we're moving up. We're moving up. All right. What else? Let's look at London, New York here. So here's another key thing I really talk about. So this is the average price point during a session. And a lot of times for New York, we will come down and sweep that kind of area and then push back upward. Now, what I tell everyone, right? I say, hey, this is a key London high area. So here's London's low, right? New York started out right at 9:30 a.m. Central here, dabbling around this high area, okay? I say if we're making a high, right? That's a good change of character there. If we're making a high across this high, we could definitely go higher, okay? If we're not, if we're not making another high here, right? We broke a trend line. If we're not making a high off this high, guess what? We're continuing on down on this downtrend. So look at these trading sessions, look at Spaceman BTC key levels, and always remember to watch those high and low areas during sessions because a lot of times we're going to hit those, do a sweep, and it's going to reverse exactly on you. So you can hit key buy and sell areas with those key levels. Whether A, you want to take the risk is up to you, or you want to wait for confirmation like a fair value gap, which is what I do, then you can certainly do that too. Or maybe you wait for confirmation to see if it's actually a wick and then just mark it in. So all ideas, all your own preferences. Other than that, guys, thanks for checking this out. Please be sure to check out my channel down below. I cover a lot of trading concepts just because every trader is so. Other than that, guys, thanks for checking out this video. Please check out my other videos where I cover a lot of different trading concepts. Everyone prefers something different. So I try to cover all the things that may possibly work for you, right? Every trader has a different personality. So I want to put it out all there for you guys to see. There are so many great concepts to learn in trading, and honestly, I just think it's fun. But also, don't forget to check out the Discord group. Feel free to join in and check it out. It's free down below. Go ahead. And I also do live trade perpetual futures in the morning. So come join me. Come see the liquidity sweeps in action, and I will talk to you soon.